Markets go up and down, just like me on a roller coaster. But unlike a roller coaster, market crashes are unpredictable in their timing and cause, which is what makes it fun. Kind of. Talks of a housing crash are all over many news outlets, and people are really calling for one because of the spike of homes in the last few years. And many people liken the housing crash that could happen today of what happened in 2008. And let's go over a little bit what happened in 2008 before we get into what most likely will cause today's housing crash. Let's say you have a really handsome young gentleman who makes fantastic YouTube videos that you like every single one of, named Avery, and he wants to go buy a home, or potentially 5 homes. And because back before 2008 you could get a loan for just about anything without having a job, income, or assets, that a lender will most likely give you a mortgage regardless, because a lender will make some money, you're going to be able to receive that loan for that home. You can have 0 down, and you don't even need to have a job, which was absolutely insane. So I could get the houses I wanted, and the lenders could get the commission they wanted too. Once a lot of people had all of these mortgages, then Wall Street would securitize a lot of this debt called mortgage-backed securities, and that was sold to a bunch of banks and a bunch of finance and all of that good stuff that sounds way too complicated. And then rating agencies would still rate these mortgage-backed securities really high, so people thought that they were really good assets to invest in, when people really thought no one would ever not pay their mortgage.
Well, they're mortgages. And who the hell doesn't pay their mortgage?
But because a lot of people were getting mortgages that they really couldn't afford, or too many of them, everyone was eventually going to get screwed. Banks started to fail, people started to lose their jobs and had no income, and they already had very little income to pay for those houses to begin with, so they had to start selling them, and at a massive loss, which is why housing prices dropped like crazy. But since 2008, the Frank-Dodd Act has come into place, which makes it much harder for you to actually get a loan. Now when you want to be able to get a loan from the bank, you have to basically share every single piece of financial information that you have ever had associated with your name with them. I honestly find this extremely annoying every time that I'm buying a home, but I guess it's a lot better than knowing that they would give a loan to just about anyone for any reason without having proof that they could pay it back. So 2008 was definitely a roller coaster of a financial crisis and a housing market crash. And just because there's a recession and the stock market is going off like crazy does not mean that the housing market will do the same. Actually, in many recessions, the last 6 or so, housing prices have stayed stagnant or they have gone up, other than 2008, of course. So again, unlike roller coasters, we aren't going to know the exact timing or the cause of why we could have a housing crash today. And we're already starting to see housing prices lower in certain markets. And when people talk about a housing crash, they usually talk generally or across the entire country or the world. But as we know, things are very specific to locations. So things will outweigh potential things that are happening in one market versus another. But the most likely thing that will cause a crash in today's housing market are actually 3 things. The overall umbrella of those 3 things and why we might see a market crash would be because of investors. I myself am a real estate investor, so I have a good understanding of how this world goes and where many people are going wrong. But over the last decade, many people have been able to still do very well even if they make poor decisions. And that first investor that could most likely cause a housing crash would be iBuyers. Companies like Opendoor and Zillow have been purchasing single-family homes left and right, with very little actual effort going into analyzing them because they have algorithms to tell them what they should pay for those properties. They have all cash and they can win a lot of homes because they can make the close process extremely easy and offer people money in cash. So what's happening with a lot of these iBuyers is they bought a lot of homes in 2020 and 2021 and then immediately sold them for a pretty decent profit because anyone could basically buy anything and then sell it in 2020 and 2021 because there was so much demand for housing and very little supply. And that same trend did not continue through 2022 and 2023 because less people were interested in buying a home because interest rates were going up. Even though supply was very low, demand started to lower and lower. And so if you did absolutely nothing to a property and it wasn't really that nice and you tried to put it on the market for $40,000 more than you bought it for, most likely that wasn't going to work anymore. And this is exactly what is happening to these iBuyers. They are no longer having success just purchasing a property and then turning around and immediately selling it for a profit. So you see a lot of these properties are getting slashed in prices and they are going to have to take some sort of hit. But it doesn't really matter to their bottom line for places like Opendoor and Zillow because they do so much volume, but it will have an effect on overall housing price because housing prices are based off of how much houses sold compared to the houses around you. So if all those houses start selling for less and less money, when you go to try to sell your house or get a valuation of your property, it's going to be worth less money because someone sold theirs down the block for less money. The second investor that will most likely cause a housing crash would be the Airbnb investor. Now myself, I own 2 Airbnb properties. They are very fun to operate and have, and they're great places for people to stay, and I really like having them. But there are a bunch of people who got into Airbnb in the last couple of years that absolutely suck. Over the last couple of years, social media has become extremely relevant in many people's lives, way more than it ever has been, as well as the spread of information. And one of those spreads of information were investing in Airbnb. And many people are making thousands, if not tens of thousands of dollars every single month having their property listed on Airbnb, and they're telling many people about it, and therefore many more people are interested in buying Airbnb properties so they can make just as much money as the person who told them they made that much money. And in 2020 and 2021, when there was so much pent-up demand for travel and not as much supply of Airbnbs, this still allowed you to have a pretty successful Airbnb, regardless of the quality of property that you put out. But as more supply to Airbnb and VRBO kept rushing onto the market and demand started to stagnate or start to dwindle a little bit, many more people were seeing their properties empty, and that's because they're absolutely horrible hosts. You couldn't just buy a property listed on Airbnb and do the bare minimum and expect to make a ton of money and still ask people to clean your whole house after charging them $250 for a cleaning fee. That wasn't going to work anymore. If you want to have a successful Airbnb, you need to offer awesome amenities like hot tubs, fire pits, really great locations, as well as not ask your guests to clean anything and then offer them awesome little plus ones in every single stay. Like I personally offer each of my guests a custom golf ball with a logo of the property, as well as s'more kits at the place where I have a hot tub and fire pit, which makes it a much better stay and a reason why they'd pick an Airbnb over a hotel. But most people who got into the game just assume they'd get rich if they just listed on Airbnb, which is why you're hearing all about this Airbnb bust. But how will this actually affect a housing market price? And that's because many people who have these Airbnbs are going to be forced to sell. So they're going to be forced to sell because they're no longer making money. They couldn't long-term rent it out where it actually makes sense because they couldn't even cover the mortgage. So they're going to have to sell their property because they don't want to own a property that negatively cash flows. And other than them being forced to sell the property because it negatively cash flows, they may also be forced by the local government to sell their property. Many cities, municipalities, and other locations have started to become very strict on Airbnb. Even where I own one of my Airbnbs, you no longer are allowed to add a new Airbnb to the market, but the current ones can stay, which is really awesome for me. But nonetheless, many people are getting shut down, and because you're getting shut down, you do not want to own that property anymore, so you're going to be forced to sell it, which could potentially flood supply into the market in that specific market and drastically lower the price of housing because demand will stay the same, supply goes up, then people can be a bit more picky about what they're offering for each property. And the third investor that could completely crash this housing market would be the over-leveraged investor. This is the person you'll typically see with entrepreneur in their Instagram bio, and they like to live a little bit too close to the sun and take on too much risk. And this is because they've been buying property left and right, because regardless of the decisions or properties they have been purchasing, most likely it has gone well because rents and prices have gone up like crazy since basically 2008. So if you invested in a property and you did a half-decent renovation and you pulled money out, you could most likely get it back and cover that new mortgage and still continue to do that over and over again, regardless of the type of property that you bought or the location that you bought. Now, obviously there are some exceptions and some people could make even worse decisions, but the average investor was very successful throughout the last decade. And many of these investors were seeing crazy success, so they never really thought about the fact that things could potentially go wrong. These over-leveraged buyers could potentially get screwed because they're holding onto no cash reserves because they've been extremely risky. They've taken every dollar from that property, put it into a new one, and so on, and have never really had to worry about those other properties and things going wrong. But this could completely change in the next couple of years. Rents could potentially lower, a lot of cities could potentially die out, like a lot of cities on the West Coast that saw a huge spike in demand demand through 2020 and 2021, and maybe now you're no longer even able to pay your mortgage with the amount of rent that you're receiving. And this is going to potentially have to make people forced to sell because they don't have cash reserves for a lot of these properties to get through the negative economic times. In my opinion, if there's going to be a housing crash, it's going to be caused by bad investors who are doing stupid things. You see this a lot with people who are building new homes and they just assume that they can sell new construction for a ton of money, and then they start having to lower and lower the price, and people are getting screwed. So if you're interested in getting in this game, make sure that you do so methodically, understand the numbers that you are running, and have cash reserves to spare in case anything goes wrong. Hopefully you guys liked that video and my reasoning for why I think there could be a market crash in 2023, 2024, if not beyond. And if you guys think there may be a different reason, definitely comment down below. I'm interested to hear your thoughts and how they may differ to mine. And if you guys like that video, don't forget to hit the subscribe and like button if you want to hear more about real estate investing as well as building your wealth. And if you like me here, don't forget to check me out on TikTok and Instagram, where I make short form content as well. So thanks again for watching, and more wealth is coming your way.